Awesome. We're live. Hello. Hope everyone is having a great day. Thank you for tuning into our live today. My name is Maggie Nielsen, and I'm a partner here at Purse Strings. We do these lives to bring tips, tricks, pieces of advice on how to be financially fearless. And then when you're ready to, today we're going to start paying off student loans. If you're saving for retirement, buying a new house, maybe you're getting divorced or married, whatever it may be, we have top tier financial professionals willing, ready, and able to serve you. Melissa Cox is one of our Purse Strings approved professionals, and today she's coming on to talk about smart strategies for navigating student loan payments, which we know are starting soon and is totally top of mind. So we're so excited to have you on today, Melissa. Before we dive into all the fun, could you give a little intro of who you are and what you do?
Yes, thank you for having me. My name is Melissa Cox. I am a certified financial planner here in Dallas, Texas. I've been doing this for 18 years now, and I've seen everything and heard everything. So I love it when people call with questions, especially when they think that they're silly, because they're never silly questions. And there's always so many questions around student loans and what we think we should know and what we don't know that we need to know. So student loans are a big part of my practice in helping people pay for college, as well as paying off college after they're graduated and ready to rock on.
Awesome. I always love that you kind of have that as your niche, because a lot of people, that's not what I see a lot, helping with those student loans. Everyone wants you to bring in a lot of money, and you're like, that's fine, bring your loans with you.
Right. It's a catch-22 for investors and people that have graduated, because you can't build assets until you get a basic financial fundamental place. Mm-hmm. And you can't get that if you have all these student loans and these awful amounts of debt and everything. So it's a big place for me to help people feel empowered to get paid off their debt and to start building their financial future, and doing it without feeling super duper stressed and overwhelmed.
That's what we're all looking for. So I'm so excited to, dive in and have this conversation today. Anyone tuning in live, if you have questions along the way, throw them in the chat. If you're watching the replay, you can throw them in the comments and we'll work on getting back to those. Just to start, get started, let's get the details about student loans starting again. What's the story there?
Yep. So it's been this big up in the air type thing. We didn't know when they were going to start. We were supposed to start in January. It was pushed back. Then the lawsuits came in, and they said it was either going to be July 1st or 60 days after a court decision, which still hasn't been made. The government's finally made a decision and said, okay, they have to start sometime after September. So beginning September 1st is when interest is going to start accruing on your loans again. Now, remember, we've been in the forbearance. So everything has not been accruing interest since it started in early 2020. Payments are going to start sometime after October 1st, and borrowers are going to start receiving notifications from your loan servicers sometime in the next couple of weeks, outlining what the process is and how everything is going to work. The biggest thing that I need you to do, and you got to do it today if you don't already know, is to figure out who is your loan servicer. Because there's been a lot of change with servicers coming and going and loans being shifted, and it's a big shell game, so to speak. So you got to figure out who your loan servicer is, and that will tell you more about when your loans are going to start. You can do that by logging in to studentaid.gov, and you can access your loan portfolio there and see who it is that holds your loans. While you're at it, make sure all of your contact data is up to date so they can get a hold of you and you can start receiving the notifications that your payments are coming.
So that's such a great tip, because I know I got some emails. I have Great Lakes, and I think something did happen to them. Either they're acquired during COVID, but I didn't look at it because I was like, well, that's not a today problem. So this is like such a great tip to figure out, because that is a must do. And so you said the interest will start on September 1st, but then the first bill wouldn't be till October 1st.
Yes, probably. Somewhere after October 1st. Now, I've gotten a lot of questions lately. What is going to be my interest rate? The interest rates are not going to adjust. So it is whatever the interest rate was before COVID started. So if you've gotten a loan earlier and you have a 3% interest or a 5%, whatever it is, it's going to stay that. The only time that your interest will adjust at that point is if you consolidate. And when you consolidate, the interest rates, they give you an average of all of the loans that you do. So that's, your interest rate will stay the same as it was pre-COVID. Any new issues, any new debt you're taking on will likely have a higher interest rate though.
Got it. Okay, that makes sense. So it's going to kind of stay the same.
Mm-hmm.
And so how should people prepare to attack their student loans when they start again?
It's definitely going to start with an inventory. My favorite thing is building an inventory. In anything that you do financial life, it's always going to build an inventory so you know what you have, you know what you're working with. You want to know what your current loan situation is, where you are. You want to know what type of loan you have. If you have the Federal Family First Loans, Education Loans, or FFEL, maybe you might have a Perkins. If you have older loans, they could be Stafford or something. Know what type of loans that you have and what the options are going to be for that. You want to make sure that you are in the correct payment plan or in a payment plan. Usually they will put you in the standard 10-year default payment plan, which you pay it off over 10 years and then you're done. But that can also be really expensive depending on the size of the loan that you have. So if that's not a good option for you, look and see what other options are available. And there's income-driven programs that can help reduce your monthly payments. If you're a public service employee or you're on a career path that you can have your loans forgiven, you want to make sure that you are certifying your employment. And you can do that, again, everything on studentaid.gov. You can use the PSLF help tool, and it will basically walk you through everything. My favorite new trick with the PSLF help tool is all you have to do, because pre-COVID, you were having to print out the documents, take it to HR. They would have to sign it. You'd get it back. You'd send it in. It was awful. So now all you have to have is an email contact for your HR person or the person responsible for signing it. You enter that into the help tool and it sends it automatically to you or to them. When they acknowledge it and sign off, you get a email that says, hey, we're good to go. And then everything's taken care of there for you. So you want to make sure that you're certifying your employment. If you are somebody that is not a public service employee and won't qualify for forgiveness, there are still forgiveness options. That's going to come with a longer 20 to 25 year payment runway and a tax bomb. So that's why it's really important to know what kind of loans that you're in, what your repayment options are, and what does it mean for you in the long run. From there, after you're taking your inventory and everything else, and it sounds so complicated, but then we're going to have to look at our budget. Yeah. Is the standard payment going to fit into your budget, or are we going to need something else to help us lower? Right now, inflation is kicking our backsides. Rent's going up, groceries are going up, everything's going up, and now we're expected to start repaying these loans, which may or may not fit into our budgets anymore because everything else is so expensive. So look at your budget, know what might fit, and then understand what your options can be going once the repayment starts.
Yeah. Even someone commented, everything is so expensive. So it is, very smart to kind of lay the chart out now. I feel like it is just going to be a basic chart once you, figure out what you have.
It is. Yeah.
It's not as complex as it sounds just verbally. It's just a chart, to see what we got going on, and really start assessing, making that plan today of how we could, tighten our budget a bit or whatever that may be. And yeah, I had no idea. I've never been a public worker, so I had no idea that you even had to certify every year for your student loan repayment?
Yes, it is an annual certification that you've got to do every year. And it sounds silly, but it's easier, and it helps keep people where have their records straight. Now,
got it.
Pre-COVID, the loan forgiveness environment looked entirely different because you were expected to keep track of everything on your own. And then once you hit the 120 qualifying payments, then you would have to submit all the paperwork to say, hey, I've got all this stuff. And then things would be missing and you'd forget certification. So it's just easier. If you can do every year, you have your certification forms, you have everything taken care of. So when someone says, hey, I don't have all the counts, you're missing 2019 and 2020, you can pull out your file and say, here you go. Here's all the information that you need.
Yeah, trying to save 120 documents over 10 years. Good luck with all of that.
Right.
I'm glad that process has been updated.
Yeah, very much. Yes.
Yeah, somebody commented saying student loan repayments will impact our economy because no one will be able to spend money on cars, houses, vacations, and so on. Which, yeah, it's probably right. It's it's going to take up a lot of that extra income that we had.
It is, and it's even more of a burden because personal consumer debt is also at a record high, and that everything just feeds into it, and it's all stemming from inflation and everything else. So unfortunately, yeah, it's not pretty right now.
No, it's not. And so I know we kind of talked a bit about, if you're not able to hit those monthly payments. Did you share all those tips that you wanted to on that?
If you're not able to hit your payments, one of the big things that I will tell clients is let's look back through our budget. When our budgets are stretched thin, but is everything in our budget really our needs, or some of them are wants? Let's kind of fine tune things and say, okay, here's what we don't need. Maybe we can cut this out, and there's a lot of things, a little bit of wiggle room, because student loans aren't going away and they can't be discharged in court. So that's out of the picture. If you can't afford any of your payments, even an income-driven payment, which on shocking, you can actually get your income-driven repayments down to a $0 amount.
Oh,
it counts. There's planning and everything behind it, but it is what it is. You want to make sure, if you can't hit those payments, to contact your loan servicer and ask them about deferment or forbearance. Now, a lot of these, we feel like they're interchangeable, but they're not. So deferment allows for a delay in the payment process, and usually it's principal amount. Sometimes it's principal and interest, but it depends on what type of loan you have. So if you have a federal subsidized loans, including the Perkins, the direct consolidated subsidized Stafford, it's the old Federal Family Education Loan. That one always gets me, the FFE.
Sure.
Yeah. If it's subsidized, you're not paying interest or principal. If it is an unsubsidized loan in deferment, you're going to pay at least the interest only. And if you don't pay the interest only, there is risk of going into default. So it's important to note the difference and your type of loan and what might be allowed. Now, if deferment is not an option for you, deferment can also go, it's a determined time amount, so it can go longer than 12 months. It just depends on your type of loan you have. If deferment is not an option for you, you can look at going into forbearance. Now, forbearance is you're paying at least the interest rates, the interest payments. Again, you're at risk of going into default. Now, it's usually up to a 12-month period, and then they'll have to reassess it, or you'll reapply and you may or may not get it. So that's really the biggest difference between deferment and forbearance. But something's better than nothing. So at least taking it forbearance, if you have to have it, and creating a plan to get those loans paid off is a good choice.
Yeah, it seems like even if you do need to do that forbearance, you have to make some sort of plan of how in 12 months you're going to start accomplishing it, because the debt will be bigger. I hate saying it, it's just the facts. So, either working with a coach or your professional to find either a way to increase your income or something like that, because there's only so long, I guess, we can run from it or push it off, until we just got to do something.
Right. It'll never go away. And even if you're in an income-driven repayment plan, and say you come out of law school at $450,000 in debt, at the end of the 20 to 25 year period that you're going to be paying off that loans, your loan value is going from $450 to almost $1.2 million.
No way.
Yeah. That's the beauty of compound interest. Now, it would be so much better if that was on an investment account.
Right.
And not a debt, but that's what that is. So at the end of, now the big question is, oh my God, how do you pay $1.2 million when I only borrowed 400 and that 450? Well, okay. At the end of that 20 to 25 year period, you're going to have what's called a tax bomb. And this is what people need to prepare for. So the tax bomb basically says the government is going to forgive your loan, but that 1.2 million is now taxable income. Right. Right. Yeah.
Okay.
Big side eye. What are you talking about? And that's not something that's out there a lot, and people end up getting to this period and they're thinking, okay, my loans are forgiven and I don't have to pay anymore. Well, now you have this major tax bomb in income. So you start preparing for that earlier and figuring out there's ways to do it. So as a professional, that's one of the things that I do to help people is say, okay, here's where all the things, here's where our path is lining up, and here's what we need to look out for. And it's what we do, why we do it, and have all the moving pieces that we try to fit together.
So just to kind of lead into the next question is like, yeah, how do you help us with this besides giving us all this valuable information? Yeah.
It is it's a lot. And there are people that get student loans just like that. There is tons of information out there, and that's a good thing and a bad thing, because there's so much information out there that it can also overwhelm you, and you're not sure who's right and who's wrong. So as a student loan planner, what I do is help people navigate their student loan debt. We're going to make sure that they understand what they've borrowed and what their repayment plan means, what it does, what are the ins and outs, what plan is best for them, how it's going to fit into your budget, how it's going to fit into your taxes, because it could be a tax situation for you, and you know what's it going to cost. It's just, there's so much hand holding that we do, and it's great because all the clients that I've worked with that I'm doing student loan planning for, they end up becoming family and a lot more than that, because it's such a big process for them. And when they call me 9 months later and they say, oh my God, Melissa, guess what? I had $150,000 forgiven. And we go crazy, and it's awesome. So that's a lot of what we do. We help you look at your budget, fine tune your expenses. We look for potential tax bombs. Is there a better way to plan? Is there something, you know, if you're an attorney or something, is there a way you can qualify for public service loan forgiveness? And kind of look at the ins and outs. Another really big thing that I'll do to help people, especially parents, is the parents that have borrowed money for their kids to go to school.
Yeah, it's huge.
It is. So Parent Plus loans generally don't qualify for loan forgiveness. And they also have really high interest rates. I'm talking 8.05% is what the last number I looked at. Right. So how do you get that paid when you're a parent and you're now working into fixed income and you're retiring and trying to get everything set for your golden years? Well, we will look at doing what's called a double consolidation loophole. So with the double consolidation loophole, it allows you to access the lower income driven repayment plans that you would with just a regular direct consolidated loan. But there's work to do because you have to remove the Parent Plus coding. So it's a double consolidation, like it says. You do one consolidation, you wait 6 months, and then you do a second consolidation. And at that point, it's removed all the coding. It qualifies for loan forgiveness. So if you are somebody, a parent that works in the public service industry, you can actually still have your child's loans forgiven under that. But that's where a lot of planning and hand-holding definitely comes in.
Yeah, I mean, that's amazing, but it sounds like a roller coaster you're going on over there.
It is. Yeah. Yeah.
Cause I had no idea about, for the plus loans that they have a certain thing, I just know they're harder to deal with. And so, I'm so glad you know all this information and can bring the light, because there are clearly so many ins and outs, but you really need a professional to help understand that. And so, everyone's kind of question with this is, how are you compensated then? Because clearly I'm not investing any money with you right now. I am getting rid of all this debt. So how are those services kind of charged?
That's usually a flat planning fee.
Awesome.
A one-time charge. There's nothing else that comes with it. There's no product involved. It's just me and you. And
got it.
Loan. So that would be the only product, but there's nothing to be sold. I get a lot of questions. What are you going to make me buy? What type of insurance are you going to make me? There's nothing to buy. It's just good old fashioned sit down. Let's put some elbow grease into it. Make sure all of our stars are aligning so we can get this taken care of. Flat planning fee is really the only way that you should be compensated for this. And
Right.
in my opinion, but that's the way I work with this, and the best way, because it's the easiest.
I love it. Yeah, it's always just nice and clear to understand, and to know that, nothing else is coming, no mystery surprise bills.
Yes.
And
no products.
No products, exactly.
Mm-hmm.
And so I'm so excited. I should have hyped this up even before about this one-time IDR adjustment that you want to make sure is shared as well, because this is where people, I think, are missing out. So I'm just going to give you the mic and let you run with this one.
Ooh, I hope everyone is sitting down and they're comfortable with whatever drink, maybe a pen and paper or whatever we have, because this really is going to be a magnificent opportunity for a lot of people. And I'll start it by saying last year in October, we had our first big opportunity that was called the Limited Waiver Program. And it closed on October 31st of last year in 22. Basically what it said is it allowed borrowers to submit all their verification forms to get credits for all the time that they have spent making qualifying payments to their student loans. Again, we're looking for 120 qualifying payments, meaning you need to be in the right type of loan, which is a federal direct loan. You need to be working for a qualifying employer, any kind of public service. So you're looking at teachers, you're looking at nurses, hospitals, police officers, fire, AmeriCorps, any of those public service type places. You've got to be working full time, and you have to be in an income-driven repayment program in order to qualify for this. There were tons of people that had borrowed that had the older FFEL loans. Now, the difference between, it says it's a federal family education loan. So it seems like it is a federal loan, FFEL, but it's not. Those were privately held commercial loans, usually with banks that were not guaranteed, but they were offered to help people with education. Although they say federal family, they don't qualify as federal loans. So people that had the FFEL loans were required to consolidate them into federal direct loans. And then you would have that done by October 31st. You would send in all of your paperwork, making sure you used your help tools and everything. And we're still getting people, because the system is so backed up, that are getting their loans forgiven for all the time and everything that they put in.
Wow.
Yeah, it was big. I mean, in the month of October alone, I helped $7.2 million of loans be forgiven. Yeah, crazy.
That's amazing.
Crazy. And it feels so good. Again, when people will still call me and saying, I know I'm still waiting, or I've got an update. Oh my God, I didn't think it was going to happen. And it's even better when somebody calls and says, not only did I get forgiven, but I got 25 checks because they were refunding some of the people that had overpaid once they had gotten their 120 payments. So that was really awesome. Yeah. So fast forward, we knew that a lot of people unfortunately missed the limited waiver program, and there wasn't a ton of education out there. And I would get people calling me on October 31st last year saying, I just heard about this program. Mind you, it had been out for a while. How do I get it? There wasn't going to be enough time. So the government decided, hey, let's extend it a little further. Let's offer the one-time IDR, or income-driven repayment adjustment. What does this mean? This means that they're going to extend that limited waiver program that a lot of people missed out on. They're going through everybody's loans that still have active loans. So if you paid off your loan before, or you've been forgiven, you're not going to be eligible for anything because your loans are paid off. You don't need it. They are going to make sure all of the payments that you had made prior to consolidations. So one of the big things that had happened, and one of the reasons that we're in this program, is every time you consolidated a loan in the past, it would restart your clock on loan forgiveness.
Oh.
So we would have people that would be paid in 8 of 10 years, and they needed a lower income payment option. So they would consolidate their loans because that's what servicer had said to do, and not being told, oh my gosh, now you've got to restart the 10-year process.
Yeah.
So that's what they're looking to correct on this. They're coming back and recounting everybody, regardless of what types of loan you're in. So right now, if you are in a FFE FFEL loan, a Stafford, a Perkins, or any of those non-federal direct loans, they're going to count that time, and they will give you credit for the time that you're in there. But, and there's always a but, in order to get the credits to you, you have to be in a federal direct consolidated loan. So the process for that is going to be, you have to consolidate those loans, even if it's just one loan, into a direct consolidation loan, and you have to do that by 12/31 of this year.
Okay.
Right. So it's not just for public service employees, which was the big thing for the limited waiver program. And that's the part that I love about this. It gives people that have been paying on their loans for 20 to 25 years the opportunity to have forgiveness.
Yeah.
And so if you are somebody that borrowed after July 1st of 1994, I'm looking at you. This is your opportunity. I hear so many people and friends, when you're at dinner and saying, I'm still paying on my loans. I've been paying forever. It's been so many years, sometimes 20 years. Well, yep, but here's your opportunity. You might still owe on your loans. So let's do a little work. Let's talk about payment accounts. If you've got those 20 to 25 years, again, let's consolidate into a federal direct loan. Let's make sure that you have the credits that count. So they're going to go back and say, if you were in deferment, if you were in forbearance, or if you were in an economic hardship time, those payments are actually going to count, which is what the limited waiver program did. So there are some people that were just not able to pay loans and they would go in and out of deferment. You're going to get credit for that. If you were in the in-school deferment, where you had gone back to school and you couldn't pay your loans, so they gave you a status of in-school deferment, or within your 6-month grace period after graduating, that does not count.
Okay.
Which is kind of, it is what it is. Unfortunately, you have to have rules somewhere. And do I agree with it? No. But I'm not making the rules, or this would be a completely different ballgame.
Right.
So make sure in and out what kind of loans you have when you are making payments. Everyone is going to have their loans evaluated. Everybody is anyone that's taken out loans after July 1st of 1994. It's going to be an automatic payment. So if you had consolidated your loans by the end of this year, you're going to automatically be forgiven. There's nothing to apply for.
Wow.
No forms to fill out. If you are public service, then you're going to still have to fill out your verification forms and those type of things. But that's what that is. That's the difference between the 120 payments for public service versus the 20 to 25 years for non-public service. For right now, until 2026, I believe, anybody that has their loans forgiven is not going to be subject to that tax bill. So it's a really big opportunity to make.
That's huge.
Yeah. They're counting COVID credits. They're counting everything that comes in, even though we didn't make payments for the last 3 years or so. They're still counting all of that. So it's a huge opportunity, to get your loans paid off or get a lot of credit, so you're not going to have as much time.
Yeah, that's awesome. I'm so glad you're able to come and share this information while there's still some time to take action and get this kind of moving. And if you've been paying these off for 20, 25 years, oh man, this must just feel like a huge weight of relief.
It is.
Just because that's just been, always a factor, and now it's no longer there.
Right.
Which is huge.
Yeah.
So for all of us, who have to start some payments, it's still really great that other people are having still some loan opportunity forgiven. Lines always have to be drawn, but there are some opportunities out there.
Yeah.
And so, I think we've covered a ton of great information today, ton of information. What is the best way for people to reach out to you if they have more questions or want to book a call and use your amazing services?
Yeah, so I'm on Facebook, LinkedIn, and Instagram. You can find me at Melissa Anne Cox CFP on all of those, or you can visit my FettermanInvestments.com website and find contact information to get a hold of me there.
Awesome. Melissa's also one of our Purse Strings approved professionals, so you can check her out on our site, pursestrings.co. Is there anything else that we didn't touch on today that you want to make sure is shared?
Oh my gosh, there's so much. We could literally spend the rest of the day and make it a wine type event because there's so much to talk about regarding student loans. But I think we really hit the big picture today without really overwhelming people. It's important to know, let's get organized. If you are somebody that is not going to qualify for loan forgiveness and public service and you're going to have to make extra payments, you know what? Go ahead and start making payments if you can, if you're eligible. Because you're reducing your principal and you're going to help yourself in the long run. That's really the biggest things that we've shared today that people really need to know.
Yeah, definitely. I think this was packed with great advice. So thank you again, Melissa, for coming on today. Please reach out to Melissa if you have any more questions, or to Purse Strings. We're always happy to help. And have a great day. Be financially fearless.